Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, where news uncertainty is widening and economies are feeling more direct effects. The WHO is now saying that a pandemic declaration is closer, although they're still holding back. But Australia has activated their pandemic plan. The latest compilation of the COVID-19 data is out. There are now 4,052 cases outside China, a rise of 720 in one day. A week ago that number was 1,200, so it's more than trebled in 1 week. And South Korea's new cases are now rising faster than China's. First up, however, Wall Street opened sharply lower again, down 1.3% in early trade. These losses were being wound back as the day unfolded. However, the plunge has returned in afternoon trade, and it's now down more than 2.4%. It is the sixth straight day of declines, which have grown to a cumulative 7.8% drop in the S&P 500 so far this week. And that comes after heavy falls in Europe, with most markets there down 3.3%. Yesterday in Asia, however, Shanghai and Hong Kong actually posted modest gains, but Tokyo fell a sharp 2.1%. The ASX was down more than 0.8%, as was the NZX 50 Capital Index. American economic data, which of course precedes the current stresses, was mixed. US durable goods orders fell in January from December, but not as much as analysts were expecting. They were, however, 2.3% lower than January 2018, a wider retreat. And capital goods were almost 8% lower year on year. But the American housing market is gaining positive momentum. Pending home sales rebounded in January, ticking up following a decline in December. They are now at levels 5.7% higher than the same month a year ago. And in China, just how hard the COVID-19 virus has hit the economy can be gauged by an official estimate that only 30% of SMEs have restarted operations following the Chinese New Year holiday, which, remember, was originally to run from January the 25th to January the 30th. Others see the impact waning, however. A lot will depend on reinfection rates and how companies respond to that. In Australia, new capital expenditure declined in the December quarter, falling more than expected. But it's not all bad news. A2 Milk now says it is seeing a big spike in demand for its products in China, and it is air freighting some supplies to meet that demand. Much of its production, of course, is from New Zealand. And US Treasury 10-year yield has plunged to a new record low at just under 1.26%, but it now recovered to 1.31%, similar to yesterday's levels. And gold is up $8 to $1,650 an ounce. And US oil prices are sharply lower again today, at now on $47 a barrel, and the Brent benchmark is now lower at just on $52 a barrel. Both are drops of more than $2 on the day. And the Kiwi dollar starts the day firmer at 63.2 US cents. On the cross rates, we're holding at 96 Australian cents, but against the euro, we're down to 57.6 euro cents, and that's still our weakest against the euro in 3 months. And that means our trade-weighted index is actually unchanged at 69.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.